If you have been following the headlines for the last 5 years, you probably know Palantir as the secretive data company for the CIA, the company that helps governments hunt terrorists. That is the old story. If you are still valuing Palantir based on government contracts alone, you are missing the most significant software transformation of this decade. Based on a deep dive into the financial filings from their public listing in 2020, all the way through the latest Q3 2025 earnings report, we can see a completely different company emerging. Today, we are going to deconstruct Palantir. We will move past the hype and look at the raw data, the shift from a consultancy-like model to a scalable software juggernaut, the explosion of their commercial business in 2025, and why their artificial intelligence platform, or AIP, is not just a product, but the operating system for the future of the Western economy. To understand where we are going, we first need to understand the foundation. If you look at the 2020 and 2021 annual reports, Palantir was a company growing fast, but bleeding cash. They were heavily criticized for their stock-based compensation and their reliance on large, lumpy government deals. Critics called it a black box. But management, led by Karp, was playing a long game. They were building the infrastructure Gotham for government and Foundry for commercial, enterprises that would eventually become the bedrock for AI. The turning point, the moment the thesis changed, can be traced back to the 2023 and 2024 filings. This is when Palantir achieved GAAP profitability. This wasn't accounting magic, it was operational discipline. They proved they could scale without burning cash. This eligibility for the S&P 500 changed the shareholder base from short-term traders to long-term institutional holders. But the real story of those years was the quiet launch of AIP. While the world was playing with ChatGPT to write poems, Palantir was figuring out how to apply large language models to enterprise data securely. Now let's fast forward to the 2025 data. The investor presentations from Q1, Q2, and specifically Q3 2025 show a company in hyper-growth mode. In Q3 2025 alone, revenue hit $1.18 billion. But look closer at the mix. The U.S. commercial revenue is accelerating at a pace that defies the law of large numbers. Why? Because of bootcamps. Palantir stopped doing 6-month sales cycles and started doing 5-day workshops. They put their software in the hands of customers. And within days, those customers solved problems they had been struggling with for years. This go-to-market strategy has compressed their sales cycle and exploded their customer count. Let's analyze the Rule of 40. This is the golden metric for software companies. Growth rate plus profit margin. In the 2025 reports, Palantir isn't just meeting the Rule of 40. They are crushing it. Their adjusted operating margins have expanded significantly, showing that they have immense pricing power. Unlike other SaaS companies that have to spend 50 cents to earn $1 of new revenue, Palantir's existing customers are spending more every year. This net dollar retention is the engine of their compounding growth. We also need to talk about the government moat. While the commercial side is the growth engine, the government side, detailed in the 10Ks, provides an unshakable floor. In a world of rising geopolitical tension, as noted in the risk factors of their annual reports, the demand for defense software is inelastic. Governments do not cancel Palantir subscriptions during a recession. They double down. This creates a defensive safety net that most high-growth tech stocks simply do not have. So what is the future outlook for 2026 and beyond? We are witnessing the transition from software as a tool to software as a brain. The Q3 2025 update hints at the future, where AIP doesn't just answer questions, it executes actions. It manages supply chains, it optimizes power grids, and it directs logistics. Palantir is positioning itself to be the layer between the human operator and the complex reality of the modern world. The valuation is high, yes, but you have to ask yourself, what is the value of the operating system that runs the Western world's most critical institutions? The financial data from 2020 to 2025 tells a story of a company that defies categorization. They are not just a data company, they are an efficiency factory. For the long-term investor, the volatility is the price of admission for what could be the most important software company of the 21st century. The numbers in 2025 prove that the flywheel is spinning faster than ever. The black box is open, and inside, it is a cash-generating machine.